Hello everyone, welcome to the ichimokucharts.com daily analysis for the SP 500 for Thursday, September the 23rd, 2010. Well, a continuation of the trend to the downside, and as we expected, we have a candle making a lower high and a lower low. A red-bodied candle as well, and this candle is actually closed down near the low. We have a fairly large shadow on the top of this candle too, and that represents selling coming in as the market tried to rally above this 1133 region. The sellers came in and sold the market off quite strongly. Now, the red body tells us that the sellers have made some net bearish progress on the day between the open and the close, and it's slightly larger than the body, the red body on the previous candle, which is slightly larger than the previous one. And this is how you like to see a trend develop. This is a healthy trend to the downside. As the trend is developing to the downside with lower highs and lower lows, it's healthy to see the size of that red body getting larger and larger. And that tells us that the sellers are making more net bearish progress each day as the market's trending down. That's a healthy downtrend. A warning sign would be the size of the body contracting, and that would be a sign that the sellers are not gaining that same amount of net bearish progress each day, and that would give us a clue as to the sellers losing some momentum to the downside, but that isn't happening. This is all quite bullish. Now, interestingly, around this 1120 region, we might expect to see some support come in. We see here previously, as the market sold off around this level, the buyers came in. Not a very strong level, but we may see some buying come in. But certainly down around the window here, which is roughly around the 1110, 1112 region, we would expect to find some support. Now, the market is trading up above the clouds, so we do have a market with an overall positive bias, and the market is trading up above the Kijun-sen, which means that the market is bullish in the medium-term time frame, but the market is trading down below the Tenkan-sen now, which means that we're bearish in the fast-term time frame, so we've taken that out, and that area failed to hold as an area of support, so that could be significant in the short term for this market, and it may suggest that the market may continue selling off and test this window that was open previously. Now, interestingly, the Kijun-sen has turned flat, and we noted that a few days ago, and when that turns flat, price action tends to be attracted back towards it, and that's exactly what's happening here. Price action is being attracted back towards this area, which represents equilibrium in the medium-term time frame. So the market is acting like a rubber band. It oscillates up around these Ichimoku indicators, and when it gets overstretched, it tends to revert back to the mean as represented by the indicators. So that's exactly what's happening here. Now, as we said, if the market continues selling off, we also have support down around the 1106 and certainly down around the 1100 region, the round number, and just below there we have the support offered by the cloud all the way through down to about 1070. But also near the top of the cloud we have the Kijun-sen, which should offer support, and also another window that was tested previously, opened and then tested as support. And that should be quite a big area of support for this market as well. Now, to the upside, if the market does find support down around roughly 1120 and changes trend to the upside, initially we will have to trade through 1133, and then we'll be testing perhaps this 1150 area once again. Now, we are in a second time frame uptrend, so that is important. The overall bias is positive with the market being above the cloud, and we can see the series of higher peaks and a higher trough. So here we have a trough, a peak, a higher trough and a higher peak as we took that area out. Here we have the higher peak here where the market terminated that first time frame upswing, and now the market's trying to make a trough. Now, if that becomes a higher trough and we take out the previous peak here, then that's a continuation of the trend to the upside in the second time frame. So that could happen. But we can't be preempting that. We do have the sellers in control, the sellers committed in this market, and the buyers losing commitment. So we don't have any sign from the short-term dynamics that this trend will turn around just as yet. So the low of the current candle becomes very important for a potential test of the window around the 1110 region.